Trading footprint charts is shockingly simple, and this is lesson 6 where I'm going to be breaking down why it is so easy and why it is the only thing you need to be using, right? So there is no better way to kick this off than going through an actual case study I took on the 23rd of March. And so this is the S&P 500 or ES futures on the 15-minute time frame. So I took an opening range breakout over here, and I'm going to get straight into the opening range breakout. But the thing is, here's the thing, right? I don't trade the opening range breakout by itself. So I see a lot of traders, they make this mistake where they think that the orb is going to work by itself. No, that's not how the orb actually works. This was the setup. Now, when it comes to taking a setup, there is a lot of things that go into every single setup, right? You cannot take a breakout just by looking at a 50-minute high and low. That's not how it works, right? So I see a lot of traders, they go through this weird phase where they go from strategy to strategy, and I see a lot of people transitioning towards breakouts, orbs, break and retest. They look at all these different strategies, but what they miss is the foundation behind forming it. And that's what I'm going to be going through in this video. So when you take a breakout, there's a lot of things that go into a breakout. So the first thing you want to understand is you're looking at what we call the 4 pillars. Now, the 4 pillars is basically this, right? So I'm going to be going over these in a lot of detail in this video. So market structure, and then we have our dealing range, and then we look at premium and discount. And after premium and discount, we look at our FVGs or fair value gaps. So those are the 4 things that we look at. The reason we look at these 4 things is because we want to identify our levels. So for example, this is a level here, this is a level here, this is a level here. So notice how the breakout is basically targeting one level to the next. That's how breakouts work. Breakouts do not work by you drawing the 15-minute opening range, taking a high and low break from here and here. That's not how it works. It looks like that, but the reason it feels so hit and miss is because you're missing such a fundamental principle, which is key levels, right? Because you will apply the 4 pillars and you'll get your key levels. And this is where order flow is so important. And the whole purpose of this video is to show you how shockingly simple it is to use order flow. But in order for you to use order flow correctly, you need to understand where your key levels are. And once you understand your key levels, you then look for a breakout. And when you look for a breakout, you then use the order flow. So this is the simple step-by-step process that every trade needs to go through. So what we're doing is we are starting with the 4 pillars. We're then finding our key levels. We're then looking for a breakout, and then we're looking at order flow. That is the basic kind of step-by-step framework that I'm going to take every. Yo, what's up? So I thought I'd make this halfway through the video. So what I've got is a current offer for a 6-month full training mentorship. Now in that mentorship, you're going to get live trading, live coaching calls, 2 weekly sessions with myself every single week. And that is designed for you to master order flow, master footprint charts, and try and blend both candles and footprint charts together so you can trade the US session in under 60 minutes a day with a 3-step mechanical system. So if that sounds like something you're interested in, just comment on the video below and I will happily send you over some details to help you get started with that. Again, it is only something if you're interested in order flow and pursuing that as a career full time. If you're not, that's absolutely fine. Let's get back to the video. Trader through. So let's now start with the key level. So I had a key level on ES futures over here. So this is now 66.63 up to about, let's say, 66.90 to about 6,700. These were the 2 key levels that I was dealing with. And so the trade was very simple. So this was key level 1, which we never really tapped into, key level 2, and then key level 3. Now, having these key levels on the chart will save you tons of losses and mental capital. What do I mean by mental capital? It is basically getting stopped out for no reason. So here we have the Discord. I'm just going to be going over my pre-market plan, right? So here we have my pre-market plan for the day. So what we can see here is we see structural high, structural low, structural high, structural low, and then we have this huge kind of spike. Now, one thing about these spikes and these news events during times like this is you do not need to worry about these spikes or these news events when it comes to trading. That is an excuse for not looking at the charts and trading what you see. Right? So don't worry about the news. So what we're really looking for is interactions at key levels. So for example, this was one key level, and later on as the market opened, there was another key level. So if I go over to the charts now and quickly break down how I got these key levels, so I'm just going to break down the theory behind them. So if we just take a look here, what we can see, so I had one key level which came from the 19th of March. So 19th of March, we had a key level over here. Now, if we just extend this over, right, what we can see is market left. So a couple of things I look for, right? What we're looking for here is a 15-minute, if I write this here, 15-minute fair value gap, and we're looking for proven areas of absorption. So this is where you need the footprint charts. And so why the footprint charts become important and why it is the main kind of topic for this video is that you need to understand that what was going on here, right? Footprint charts were very active here. So we saw the absorption of sellers, and today we saw the absorption of buyers, right? So this is very important. So I see too many traders going for breakouts without understanding where to take them. And this is the biggest problem in the industry, where traders are using orb, but they don't understand how the orb works or where to use the orb, and most importantly, why they're actually using the orb, right? This is the mechanics behind trading the orb, right? So it's very important, you kind of understand this. So this was my key level from the day, and I also had another key level over here. So same sort of thing, right? So again, we're looking for, we see a 15-minute fair value gap. That's kind of step number one. So 15-minute FVG. And the second thing we're looking for is absorption areas, right? So I'm going to be going over absorption in a lot of detail in this video, right? But what does this absorption actually mean? So it's the same sort of principle, right? So we had an absorption here. So sellers were in control, and then buyers were roughly in control, and then sellers were in control, and then at this area, buyers took over. So sellers were in control, and then buyers came in. This is how markets work, right? Markets, you got to understand where the zones form. You want to keep on top of them, right? You want to understand that. So this, you can call it support and resistance, whatever you want. It is a key level because there's a 15-minute fair value gap and there was proven absorption. And I'm going to be breaking that down in this video. So now let's go to session. Let's try and understand what the session was actually doing, right? So when it comes to session, there's a couple of things I look for in this particular order. So the first thing I look for, so I've briefly gone over where my key levels were. I've made separate videos on how I find those key levels, so feel free to check that out. Right, that's the first thing. So we have our key level. So we have 3 levels. Now, typically in the New York session, so this is now between 9:30 to 11 Eastern, you only need 1, maybe 2 levels max. You don't need any more levels than that. That's the first thing. Now, the second thing you're looking for is you are looking for that 15-minute range. You are looking for that 15-minute range. And so how does that 15-minute range actually work? Well, we're waiting for the first 15 minutes. So it's going to look something like this, right? So we're waiting for those first kind of 15 minutes to form, right? So what we do is I draw a yellow box from 9:30 to 9:45. So it looks something like this. 9:30 to 9:42, 3, 4, 5. That's the first 15 minutes, right? That's the first 50 minutes. Now, what's important to understand here is we want to understand what was going on at the top and the bottom of that 15-minute range. It's very important. And most importantly, we want to understand which direction the breakout's going to occur, because the breakout occurs from the level. Nowhere else, right? We're not looking for this, right? I see so many traders. This is the lazy way of doing it, right? So lazy traders never get anywhere. If you want to understand how to trade breakouts, you need to understand the price action behind them. I'm going to say that again. If you want to get good at breakouts, you need to understand the price action behind them. And this is why step number 3, what I call it break and retest with absorption. Right, break and retest with absorption. It's very important you get this third step correct as well. Break and retest with absorption. So what that means specifically is now, right, we want to see which kind of direction does the market break above the zone. So we're not really interested in the highs and lows. I'm going to take that off. Right, what we want to know is, do we break above or do we break below the zone? We want to see which direction we're going to break out in. Right, so I was keeping an eye on this very carefully in the Discord as well. So this was my execution, right? So I executed at 67, 66. So I was risking about, 500. It eventually went down to 400 and something, right? So we sort of want to break down. So risking about $500 to make 756. This was sort of the trade, right? So it's not the biggest risk reward. I'm going to be breaking down why, but it was still a very clean breakout. And so I want to be going over the order flow in this video. So specifically what we're seeing is we're seeing a breakout to the upside. And so my execution or my entry came at 66, 67, or 68, let's say. 67, 68, right? So let's put that 66, 68. So here. Now, I was comfortable to have my stop below this wick here, where I eventually had it here, but I trailed the stop as the market goes towards my zone. And I was targeting the midpoint of this zone over here. So about a 1 to 1.5 risk reward. It was actually a bit less. So I kind of closed around 1.4. 1.4 R, right? This is how the trade played out. Now, the reason I'm making this video is to go over step 3. So it's basically the breakout. What was I looking for inside of the key level at this area, right? This is what I think everybody should know and everybody should understand this. Candle by candle, I'm going to be breaking this down. Now, I wait for the first 15 minutes and I want to see whether the market breaks higher or breaks lower. And so we're going to be looking at this candle by candle. So we see here, right, candle 947, 948, and 949, right? So we see a break above as we approach the 15-minute range high. Just here, right? 15-minute range high. Now, what's important to understand is we want to focus on the price action inside the key level. So we're going to be interested in this region. Now, what is important about this region? I'm going to label it in red. So why have I labeled this region in red? The reason why I've labeled it in red is because this red region represents aggressive selling, right? So this is what we want. I want all the traders to understand this. Aggressive selling. Now, what does aggressive selling mean? And why is aggressive selling important to us? So we've got our key level, and now we're focusing specifically on the order flow, right? So if we're focusing on, we've had break, retest, and now we're looking to go long, just as we break above the zone over here, right? So I initially went in with 5 contracts to begin with. So here's where we had sort of the same kind of price action. So here's the candlestick chart, and more importantly, here is the footprint charts, right? Footprint charts. So when we look at the footprint charts here, what we're seeing is a couple of very interesting things. So I want to go over 3 specific candles, 1, 2, and 3. And this is the reason why order flow is so important. So I was having a conversation recently with someone I know, some trader, and what he was trying to say to me was that he can look at candles and he can see them breaking higher, and obviously if he sees a green candle, that means that buyers are in control. Obviously if he sees a red candle, sellers are in control. Well, that cannot be further from the truth, because you cannot be so ignorant to trade markets without reading them. I'll repeat that. You cannot be more ignorant to trade the markets without reading them. And so those who read the market will be paid by those who try and predict the market, right? I'll repeat that. Those who try and predict the market end up paying those who can read the market, right? So if you are reading the market and you actually know how to read the market, you will be paid out by those who sit there and try and predict to candles. So you want to read and react, not guess and gamble. Right, and this is this chart here is what separates guessing from gambling, because I've seen a ton of people. What they'll do is they'll try and trade a breakout here. What they'll see is they'll do something like this, right? So they will see some breakout like this. They'll see the market breaking lower, and they will try and take a short position as we break below here, and they will have their stops below the zone. And they'll make up some excuse, right? What they'll say, this was my former self as well. They will take this huge, we've got a massive fair value gap here, and they will try and target that fair value gap. And before you know it, what's happened is, that's happened, right? They've lost. So I see a ton of, I think it's just stupidity at this point. I don't think any trader should be trading without order flow, right? I don't see a way around it. Like, people try and cope their way out of thinking there is a way around it, but I see that as a precious loss of time, right? More than anything else. So I'm going to write that down here. So just as a quote of the day. So this is from me. So those who fail to read the markets will pay out those who do, right? Who do. So those, let me spell that right. Right? Those who fail to read the markets will pay out those who do. So we want to know what's going on inside of our key levels. So I've made separate videos on how to find key levels. Feel free to go and check those out. But those who fail to read the market will pay out those who do. So we want to read the market. We want to understand what was going on. So I've dedicated this video to footprint charts specifically. So I want to be going over a few specific candles. So here we have our 15-minute range over here. So I'm just going to get rid of that. So we have the 15-minute range high. We have the 15-minute range low. So it looks something like this. So I want to be going over a few candles, right? So let's first go over this green candle here. This one here, right here. So we've come into our level. What was this candle doing? This green candle. Very interesting. So I've highlighted it here. So what we see is we see a green candle, we see a wick. Now what's super interesting about this, and I still get fascinated, right? I've been trading order flow for 7-8 years, and I still get fascinated with this. We see a green candle, right? So the candle itself is green. A green candle means that, of course, price was bullish in that particular 1-minute candle, right? This 1-minute interaction. 9:45 Eastern. When you see a green candle, right, you want to dissect and see what was going on inside of that candle. Now, inside the wick, there was a ton of aggressive selling, right, which is what I've labeled down here. There was a ton of aggressive selling over here. Huge amount of aggressive selling, right? Sorry, not this one. This one. There was a ton of aggressive selling, right? And what we can see here is these kind of dips, right? These are sort of dips lower into the zone, right? Notice how we break above the zone after sort of 1, 2, 3, 4. 4 retest candles. And so this is how a break and retest actually forms, right? We see the market breaking higher, we have our retest, and the retest can take anywhere between sort of 1, 2, and up to 4 candles sometimes 10 candles. This is the break and retest cycle. So what we have is we have break, we have retest, and then we go. And so by using this simple framework, you can eliminate a lot of your losses. But it's only going to work if you listen to what I set up here, right? So what I set up here is something you need to remember. Those who fail to read the markets will pay out those who do over a long enough time horizon. So you can obviously come into the markets and you can you can predict candles, you can guess and gamble, and you can win. And that is the most dangerous thing with the markets, right? The most dangerous thing with the market is that it rewards idiotic behavior, because at the end of the day, there's only one of two buttons you can press. But if there's one of two buttons you can press, which is buy and sell, why would you not read the buyers and sellers when you enter? Well, just remember this, right? Those who fail to read the markets on a long enough time horizon will end up paying those who do. It's as simple as that. There's no other way around it. So some people realize in year 1, some people realize in year 2, 3, 4, like me. Some people never realize. Some people are realizing as they watch this. So here we have our retest candle. So here's one. Let's get rid of that. Here's one retest candle here that we want to focus on. Right, we want to focus on these two bearish candles here. So on the footprint charts, they look something like this. So I've highlighted this candle here. So this is a red candle. It's a bearish candle, but we see a ton of aggressive selling inside this, right? So I'm going to assume you've watched all the previous videos. Now, when you've watched all the previous videos, you will understand exactly what the delta actually means. So what the delta simply means, the delta means that aggressive buyers are more than aggressive sellers in this region. That's what the blue delta means, right? The red delta means the opposite. So we see a lot of aggressive sellers. So in other words, what this means is that sellers are putting in a lot of effort, right? Sellers are putting in a lot of effort. Now, it is your job to read that. Now, there is no orb or opening range breakout strategy that will help you do this. And the most important thing is it's happening inside of a key level, right? So I'm not doing it here. I'm not doing it here. I'm doing it inside of a key level. This is the most important thing to understand. Do not ignore this in your trading ever, right? So what we can see here is sellers are putting in a lot of effort. Now, think of it this way. If we can break above the key level, and more importantly for my orb traders out there, if we can break above the 15-minute high, right? So this is the 15-minute range high, the orb high, right? This is the 15-minute orb high. If we can break above sort of, let's say here, and of course, let's say here, were these sellers successful? Right, ask yourself that question. Were those aggressive sellers successful? Again, you can only read this via the order flow footprint charts, right? Were those sellers even successful? Well, the answer is no. Because if all these sellers were successful, we would have broken below the 15-minute range low and we would have got to our level over here, which is why having levels is so important, right? So we have key level 1, key level 2, key level 3, and you need these on the charts before you even begin the session. Now that this is it, now that we have our levels here, so we can see sellers here have failed, which means that buyers are in control. And that's where the initial setup came, right? That's where the initial setup came. So the setup is what, or my first entry, I kind of sized up later on, but my first entry was at 66.68. Stops just below here, and again, I was targeting a 1 to 1.4, so it's around here. Now, just from one level to the next, right? So again, this was a very choppy trade. I mean, I think I took like 3 attempts just to get there, but we got there in the end. I think there we go, there we go. So this is where this is the trade as well. So a bit of a choppy trade, wasn't the best one to hold, but still a good trade, right? So we had absorption here, we had absorption here. So you want to kind of focus on what was going on inside of this region, right? So this is where the footprint charts comes into play. So that's it. So just wanted to go through that. So there was my initial execution, right? One more time, just to break this one down. Here we have the initial breakout, right? What we see is aggressive selling, no break below. Aggressive selling, no break below. Tons of aggressive selling here. Look at that, right? We still stayed above the zone. Even here we had a bullish candle with some aggressive selling, and we managed to break above. All right, even here we had this little sort of retest over here. Retest that filled this 1 minute fair value gap, right? Look at that green candle. You can see from the corner, lots of aggressive selling, right? But the market still broke higher. And so this is how to trade orbs the right way, right? And this is why it's shockingly simple to use footprint charts in your analysis, and you should be using them in your analysis. I don't think there's an excuse for in 2026 not to be using footprint charts at all, right? And if there's one thing to take away is this, right? Those who fail to read the markets will pay out those who do. So I'm just going to leave that here on the screen. Those who fail to read the markets will pay out those who do. Just remember that saying. If there's one thing you take away from this, it's just that. Now, the other thing to finish the video on is the target, right? Why did I target where I did, right? So here we had a key level from, I believe this was March the 13th. There we have. So what we had is we had a demand zone, then we had price hitting a supply zone, another supply zone, and then, of course, we predicted another supply zone. So how did we do that, right? So why did I think we were going to have a supply over here? So the reason we were going to have a supply over here, or the reason I targeted there, is because the market told me that sellers were in control there, right? So if I just kind of take this away, I mean, I know where my levels are, right? And so if you know that sellers were in control here, because I've seen it via the footprint charts, sellers were in control here, I've seen it via the footprint charts, right? When price comes back to this level, it is wise to take profits off the table or just exit. There you go. Because if sellers were in control here, right, and sellers were in control here, sellers might be in control here because I saw a lot of aggressive buying and the market struggled to, really break through. Yes, it did break through it, but it struggled, right? So when price comes back to here, you want to be cautious, right? You want to be cautious when we come into our supply areas. And so this is how you use the footprint charts, right? So it is a shockingly simple thing to use, but it's also shockingly easy to avoid if you think you know better, sort of thing, right? So it's not a dig, but footprint charts are quite important. So I'm just going to finish off the video, just giving you a few moments to stare at the screen and try and understand this chart over here, right? So you can have buying candles or bullish candles with sellers inside, and you can have bearish candles or red candles with buyers inside. It is your job to understand where the key levels are. It is your job to understand where the breakout's going to happen. And most importantly, it is your job to understand why the breakout is occurring the way it is.